Hi everyone. Uh, my name is Johnson Agiriga. I'm actually taking the lesson for uh, this week homework, and I think it's a little bit pretty easy and straightforward. But I will just quickly go ahead to show you how I was able to do the homework. Um, the first one, which is exercise 13. The question here asks us to be able to present a partial balance sheet for all their accounts payables that were actually being done. So I've actually done this, so I'll just quickly explain this before I actually moved to the next one. So, of course, balance sheet, I think just a follow-up to what we've actually been discussing since the beginning of the semester. We have our date, which is December 31st, 2017. Then the first item we have is our current liabilities. So if you observe here from my screen, you're going to see that I've actually listed all the current liabilities, the notes payable, accounts payable, interest payable, income, taxes payable. I believe specifically there is no format for you to list them, but ideally you start listing the notes payable before the other ones. So, but basically there is no format of you listing all the items in as much as you got the items in the correct order. So after listing all the payables, there's this particular one here, unearned rent revenue. Then I calculate everything up and I actually had my total, which was 893,000, which is the total current liabilities. Then after that, I move to my long-term liabilities. Then I start from the balance payable. Then I less discounts on balance payable, which gives me the total figure here. Then I continue with my notes payable, and these are long-term liabilities. So then I have my total long-term liabilities of 1,784,100. Then I sum this up with the current liabilities, and that gives me the overall total liabilities. So from the experiences we've done previously, I believe this is actually going to be pretty easy for us to be able to get. So let me quickly move to the next one, which is actually exercise 13.3, and I've actually solved this also in my Wiley Plus. So I'm just going to explain this on how I was able to solve this out. So the question here is actually Carla Vista Company issued 480,000 of bond of 9% and 15-year bond on January 1st, 2007 at face value. Interest is payable annually on January 1st. So the first answer we are being asked to do here is to prepare the journal entry to record the issuance of the bond. So this is actually the first year, which is January. So there is actually no interest here. So all we need to do is to record the exact amount, which is 480,000. We debit cash 480,000, and we credit bonds payable 480,000. Pretty straightforward. So the B part of it here asks us to prepare the journal entry to record the accrued interest as of December 31st. So basically, December 31st, which is actually a year. So if we take the face value figure, which is 480,000, and we multiplied it by 0.9, which is the percentage of the interest rate. So we're going to have 43,200. So 43,200 will have to, our interest expense will be 43,200. We'll debit this and we actually credit interest payable 43,200. So that is also pretty straightforward. So I'm actually going to move on the next one, which is the C part of it. So in this C part of it, we have been asked to prepare a general entry to record a payment of interest on January 1st, 2018. So we are still dealing with the date here, January 1st, 2018. So basically, we're actually going to use the same figure we got over here. So we kind of switch them up down. So we'll debit our interest payable 43,200 and we'll credit our cash 43,200. So I'm going to quickly move to the D part of it that says we prepare the general entry to record the redemption of the bonds at maturity. So basically, this is the face value or the actual amount for the bond. So we debit the bonds payable 480,000 and we credit cash 480,000. So this is actually, I think, pretty straightforward with the experience we've had so far. But if you have any question, you can always shoot me an email. Then probably I can go much details. So with that, I'll just round up. Thank you guys for listening. Bye.